So when a business owner is looking at the level of dividends to take, the best thing to do is to begin by checking that there's available profits. So if there's no available profits to use, okay, then it's irrelevant. You can't take a dividend. Okay. Now, profits for dividend purposes are not looked at in year. Okay, they're looked at on a cumulative basis. So the way I think of it is every year, whatever profits you make go into a big bucket. Every time you take a dividend, it comes out of that bucket, and that bucket basically sits there and builds up year after year after year. If there's no profits, so technical terms retained earnings, if there's no retained earnings in that bucket, then you can't take a dividend. If you haven't made a profit for 10 years, but there's still loads of money in that bucket, then you can take a dividend. That's the first thing to look at. Second thing is then say from a personal level, what dividends are tax efficient? Depending on your scenario, okay, there's lots of different routes you can go down here. The first thing I would do is make sure you've used your dividend allowance. Okay, so £500 a year is taxed at a 0% rate. After that, make sure you've used the remainder of your basic rate band. So the basic rate band goes up to £50,270 a year, and out of that will come your salary, any dividends that you've already taken, any other income you've got. Okay, so I can't give you an exact figure on this video because it's personal to you. Once you've used that level, then there's decisions to be made. Okay, so for years that's widely considered the most tax efficient route. It's going up to that £50,270 limit. However, that limit hasn't really changed much over recent years, and as costs are going up for everyone, etc., what you're finding is people are finding it harder and harder to stay in that bracket. So it then comes to the question of what limit do you go to next, and this really is unique to everyone. Okay, so some people are now going up to the £100,000 limit. Some people are looking at their own finances and saying, right, well, I have to do everything possible to stay under that 50,270. Some people are turning around and saying it's irrelevant. You know, I'm now in a position where I cannot live to the 50,270. I need to go to 60,000 a year or 65 because my mortgage costs have gone up by £500 a month. So that's got to come from somewhere. The best thing to do is to actually have a conversation with us about it. It's pointless us planning to a £50,000 limit. At the end of a meeting, you leave and think, well, that's useless because that doesn't even cover my mortgage. Okay, so we've got to make sure we actually have a conversation that's actually bespoke for you. Outside of that, level of dividends I would also consider would be when you're looking at things like mortgages. My view is that if you have a series of tax returns and you go for a mortgage and your income is going up and down, it's harder for the mortgage company. I'm not saying it's impossible, and I'm sure there'll be people that disagree with me on this, okay? But going for a mortgage as a business owner, every time they ask a question, it's like another blocker in the way, okay? So the easier we can make it look for the mortgage company, a nice easy position where you've taken out 50,000 a year for the last 3 years, it's just easier than 80,000, 10,000, 80,000, etc. And it's more tax efficient to do 50 each year than 80, 10, 80, 10.